And welcome back to the Financially Simple Podcast. I'm your host, Justin Goodbread. Today, we're going to deal with a hot topic. I don't know if you've watched the media. Well, we're probably sick and tired of watching the media, if you really want to know the truth. We have watched this thing to the point of nauseum. It seems like every day there's something new happening. But I got to tell you, about a day ago, as I'm recording this now on April the 23rd, about a day ago, we watched an unusual event happen that I have never seen in my entire life. And if you had asked me what happened a day and a half ago, if it would have ever transpired, I would have told you you're probably smoking crack. That would have been like, dude, you're smoking crack. That can't happen. That's kind of how I would have answered this. But for those of you who have followed any type of the marketplace, we saw oil. I mean, like you go to the auto store and you buy this black stuff that you put in your Ford F-150 or your Kubota tractor, right, to make the thing run. We saw oil go negative. Like people are paying us to take it. Now, whenever I saw that, I got to tell you, first thing I did is I wanted to run down to AutoZone to see if they'd pay me to take some oil so I could have it in the house here so on the farm there in the garden, so I could have a surplus of oil. I'm like, hey, I walked in. I'm like, hey guys, oil's negative. You'll go ahead and pay me $10 a gallon or $10 a quart. I will take the oil off of you and walk out with a little bit of cash. That's not how it was played. Okay. I tried. I was being a little silly. I thought about doing a video at that point, but that's not what was transpiring. So I'm sitting here as a certified financial planner and all the credentials that I have, and I'm wondering what's happening in the world. And so I reached out to the brain, the one, the only, my dear friend and colleague, Mr. Chris Stewart, who is joining us today on the podcast to try to set me straight, to keep me from going to go now to, instead of AutoZone, maybe go to, one of the other places and try to buy some oil. So Chris, man, thanks for being on the podcast today with us.
Yeah, thanks for inviting me.
All right, Chris. As I'm reading the headlines, I watch oil goes negative. I watch oil goes negative first time in history. I watched a drop that was like stupid drop in the price points of oil. And then today, we're shooting this live, today I'm watching the oil prices is surging. I'm reading a headline that says the oil prices of 150 years, a spectacular plunge and then an unbelievable recovery. Now, I don't think 11% or 25% is unbelievable recovery after what we saw last week, but dude, I got to ask you, can we make some headway and make some sense of what's happening here?
Not really. Maybe a little bit.
I figured you were going to say that. Okay, so let's try to make some headway, at least from a professional level. So those of you who don't know, and I think if you follow the podcast, you know that Chris Stewart's a colleague of mine here in the company at Heritage Investors, Heritage Business Advisors. Chris Stewart is a chartered financial analyst, which is the gold standard in the world of investing. He spent his career dealing with investing strategies. And I mean, he's lived through almost every major market movement in our most recent history. And so he's seasoned, as I like to say. He's been around the block a while. He's seen things. But Chris, have you ever seen anything like this?
I've never seen anything like anything we've seen in the markets the last few months.
So let's tear this onion apart. First of all, whenever they say the oil drops, what are they talking about? Obviously, they're not talking about the oil in the cans there at AutoZone or Walmart, or are they?
No, that's just one use of a barrel of crude oil. So remember, crude oil is what comes out of the ground. And there are two major benchmarks. One is West Texas Intermediate oil, and the other is Brent oil. Brent oil comes from the North Sea, and that's traded primarily in Europe, and WTI traded the benchmark here in the US. So almost half of a barrel of oil gets refined into gasoline. About half of that gets refined into diesel. Another 10% goes to jet fuel, but oil goes into everything from plastics to asphalt, a variety of things. So, but the crude oil barrel has to meet certain specifications. WTI is a pretty sweet and light crude that's easier to refine. There are, especially in the Gulf, they tend to have more sulfur and they tend to be heavier and worth less because it's more difficult to refine. So that's what, when the market says oil went up, went down, here they're talking about the WTI crude, either spot price or near futures contract.
Now, I know enough about economics or economics, depending on where you're at in the country or the world. I say economics, depending on what day of the week it is. I may say economics. You never know. But I know enough about supply demand. And so I have to opine in my simple mind that whenever we shut the demand of the world, for that matter, dealing with this COVID-19, especially with airplanes, with automobiles, with diesel, with all these various things, not to mention how oil is used in consumptive products, as you mentioned. I mean, I've seen oil mentioned in a lot of things, that when we shut the demand down, the oil manufacturers, the oil miners, what do they call them? Oil miners, am I right on that?
Exploration production companies, E&Ps.
Okay, so I'm assuming that they did not throttle back production as fast, and therefore we created a supply. Is that a simple scenario?
That's a simple scenario. Don't forget, a lot of this went back to January when there was a war within OPEC to bring the price of oil down. Now, a lot of producers, especially here in the U.S., if you're Saudi Arabia, your cost of bringing oil out of the ground is very, very low. But a lot of these producers here in the U.S., the frackers especially, they have a lot of debt, they have production costs. You can't flip a switch. You don't just tell people at the end of the day, hey, we're shutting down the well, come back next week. It takes money to shut it down. It's hard to do. And because you have debt to service, you're probably going to keep pumping, even if you're losing money on that barrel, just to have the cash flow. So cash flow can be king for these more marginal producers.
So 2 days ago, you were telling me, and you wrote up a little story here, that if I were able to take 5 tankerfuls of trucks, and I think it was Cushing, Oklahoma, which is in the sweet spot,
Yep.
kind of talk through about what that actually meant whenever prices went negative on this crude.
So what it meant was, again, we all like to think, oh, I'll buy a contract of oil. But if you're going to take delivery, that's about 5 tanker trucks. Now, I don't know about you down there in Tennessee, but here in Massachusetts, I don't have 5 tanker trucks sitting in my backyard. And 5 drivers take them down to Cushing, Oklahoma. Cushing, Oklahoma is kind of where all the major pipelines converge. That's why you take delivery in Cushing. So hypothetically, if you had a place to put it and you could take delivery in those tankers, they would pay you $40,000 for that contract.
I actually saw on social media. I was laughing because on Twitter, we have handles at Justin Goodbread on Twitter, on Facebook, on LinkedIn, on Instagram, pretty much out there. YouTube as where this is going to be streaming on. But I was watching. I like to watch Twitter because I follow a lot of news personalities on there, and one of the news personalities says, "I have a swimming pool. You're welcome to fill it up. You can pay me $5,000. I don't think that's what they meant, but it was still funny nonetheless. So
it costs a lot more to clean the pool after.
Yeah. My brother's in the swimming pool business, and it would be a mess. He and I were actually laughing about that on the behind the scenes about, man, Justin, I think I could maybe convince all of our clients to put oil in their pools here in Southeast Georgia, and maybe we could get a little revenue, and they could cover their maintenance and expense. Except that I'd have a nightmare trying to get all the oil out of the pool afterwards. It'd be pain. But we watched almost $1 million barrels of oil per day before the pandemic drop almost 30%, if I'm reading my numbers right here, which was a pretty sharp decline. And then the airlines dropped. I mean, we even saw Virgin Airlines. Richard Branson did a video just yesterday, which I thought he was extremely poetic in his delivery of the fact that, hey, Australia's not jumping in like several other countries around the world. He's going to get through this. I'm a business owner. I'm going to come out of this. I don't need the government. You guys have to just bear with me. So we watched even like a Virgin Airlines, who was by far one of the most profitable companies out there before this, go bankrupt. And so airlines are even down 90% or so in capacity at this point. So as we're dealing with the coronavirus, we know why the price kind of dropped, because we can't shut demand off very fast, but what would cause the price to rise 11-20% on some of these positions 2 days later?
Well, when you say we can't shut the supply off quickly,
I'm sorry, supply. I misspoke.
No, that's fine. part of it is just speculation. I would argue that part of the negative price drop was people more not professional energy traders saying, boy, oil's down. It's $10 a barrel, $5 a barrel. I'm going to buy that. And they got squeezed out. I mean, the markets will often move in the direction to create the most pain for the most amount of people.
Yeah.
And commodity markets, especially, remember, this is nothing like the depth and breadth of the equity market, the bond market. So I think that was part of the squeeze. It's just incredibly volatile. I mean, we've seen that kind of volatility in the stock market, which is broad. So I'm not that surprised. I was surprised to see us, negative $37 a barrel is crazy.
Yeah.
But it only stayed there for just a moment.
Yeah. So I've had a lot of questions come through social. Now, we can't give out specific investment advice, and that's not what we're doing here. We're answering the question that so many people have asked is, man, what does this mean with oil dropping the way it is? And then we've seen a lot of people say, hey, should I buy oil? Now, we got to first lay out the fact that maybe you can go out and buy, what'd you say, 5 tankerfuls? That's a contract. Maybe you can afford to get 5 tankerfuls of oil delivered or drive down and pick it up with your semi rig. Maybe you're out there and you could do that. I actually know some friends who could do that, believe it or not.
Yeah.
Maybe you could do that. But for most of us at least in East Tennessee, or those of us who are not in that particular industry, the idea of going out and buying oil, we're having to purchase it through what? An ETF, a stock? How do you actually buy oil?
Well, I had to research this because I have no interest in doing it. You talked about investing. This is not investing. This is speculation. Investing is what we do: diversification, dollar cost averaging. Take the long view on markets. So this is pure speculation. There are ways to invest, not just buying a contract on the CME, but there are ETFs that either track the price of oil itself. You can get ETFs that track the exploration production companies, the oil service companies, the energy sector as a whole. So if you want to take a flyer and take a little bit of your portfolio and take it to Vegas, because that's what it's like, there are vehicles that allow you to do that.
So now you mentioned a couple of acronyms there that I want to make sure I understand. CME, are you talking about the Commodity Market Exchange? Is that what that CME stands for? Okay. Yep. So we're talking about the Commodity Market Exchange. We could go
Chicago Mercantile.
Okay. Say it again.
It's the Commodities Market Exchange, but it is called the Chicago Mercantile Exchange.
Chicago Mercantile Exchange. Okay. I'd forgotten that from my testing. Thanks for reminding me, but I knew it was deal with the commodities market is where the exchange at. Actually, I saw that when I was in Chicago. I went there and actually was able to visit that. It's kind of chaotic. It
is.
We have actually a client who sells corn futures. And they deal with that as well. So it's pretty interesting to kind of get into this. So if someone wanted to buy oil, we're obviously not going to deliver a crude oil, put it in our swimming pool. That's a little levity there. But someone could purchase it through an exchange, maybe buy an ETF. They could actually buy transportation, exploration, delivery, various ways around the oil if they wanted to speculate in that area. Now, when I was researching how I like to research and read crazy things, I was noticing the sheer amount of what we call in the professional world, dumb money or slow money. And that's by no means a derogatory. That's just a term that's used, friends. I was noticing that the sheer amount of retail investors buying oil was so far greater than the professional investors. What would the professional investors know or have experienced that the common do-it-yourselfer that's maybe using an app like Robinhood or something of that nature? What would the professionals know that would prevent them from going out and, as you said, speculating in oil that the retail investor or the DIY person doesn't know?
Yeah. That's a great question. I think that, like everything, when things get very cheap and it gets out in the broad market, you attract people that are not natural investors in this market. Commodity futures traders, it goes from the pits where you were, where these guys are buying and selling, but at the end of the day, they're out, right? Mm-hmm. They're just trying to make money on intraday. Yep. There are people that are trying to play the calendar spread, for example. There's a whole range of things in the ocean that I don't know about commodity investing that these guys do, but just a few things that I do know. There's the calendar spread. Oil is typically in backwardation, where futures prices are lower than spot prices. There are reasons for that. There's no storage costs for oil in the ground is one thing. But now that the market is in contango, and these are great words I always love, contango.
Yeah, explain what contango means.
Contango is the upward sloping curve where future prices are higher. And because of the glut, the spot price is very low. But that also increases the cost of buying new contracts, rolling your contract. So generally speaking, a commodities trading professional would roll up the backwardation curve by, say, June, August, whatever, September futures. And as those come closer to spot, they would roll up. They would become more valuable. So it's thrown a wrench in how the market normally works, but these guys are expert in many more ways than the slow money coming in that usually is not going to be successful.
Yeah. Yeah. And for instance, the reason Chris just went extremely technical, and that's why I love him, because he can go really deep, really fast, but he can also keep things super simple for my simple mind. And what I wanted him to, the reason why he went into that world is because it boils down to this. People who do this on a day in, day out basis understand the float and the flows and the movements that are happening. Now, they may not understand why it's happening to the magnitude and the depth that we're dealing with now, but they understand the greater process, as opposed to the media headlines that saying, oh, the oil fell 36. Oh man, it's a great time to buy. Let's go and throw our cash into this now. So Chris used a word a while ago, talks about speculation. Speculating is where, like he said, go to Vegas. You know, I have an opinion when it comes to speculating. I think I would rather take Miss Emily and go to Vegas and maybe put, $500 on black one time to see what would happen, as opposed to putting $500 in a speculative investment, because I see so many people get burned that way because we candidly don't know what we don't know. And even the experts at this particular point, if you actually, when I say experts, every time I laugh about that, because an expert ultimately is a has-been drip from a faucet is what it actually breaks down to. So X is a has-been, a spurt is a drip from a faucet. So if you hear the term expert, it means that they were once a drip from a faucet. So sidebar there, just for a little bit of levity. But even the experts have a hard time with today's movements. And they've seen just about everything. I mean, we're talking with Chris Stewart, CFA here, a colleague of mine on the show, in the company here, who has lived and managed professionally portfolios for many, many well-known institutions. And we're sitting here talking on and off camera, and he's saying, Justin, this doesn't make any sense. I know why, but man, I'm even not going to invest in this. So Chris, as we kind of wrap this little section up, we realized oil prices fell really fast. We realized this kind of, maybe they oversold or went too far. Now they're kind of bouncing back. And for someone to buy oil at this point would be a speculative type move. And I get that. And as you said, you can speculate. You can take your money to Vegas. I think I'd rather go to Vegas personally, personal opinion. They have really good lobster out there, by the way. I think I'd rather go to Vegas than throw my money in the market and just be frustrated. What is our position as a firm, as a registered investment advisor? And by the way, registered investment advisor does not mean that we reach any level of recognition from the Securities and Exchange Commission. It means that we only conduct businesses in the states of which we're registered to conduct business. That's what that means. And that we're able to provide investment advice to our clients. And once again, this is not investment advice. This is educational purposes only, okay? We're going to tell you to speak with your investment advisor or do your own due diligence. But as I've now put that disclaimer out there one more time, just for safety in this particular position, Chris, what is our position? We've been entrusted to manage millions and millions and millions of dollars for the clients whom know, love, and trust us, and us vice versa to them. Why would we not participate in this oil bounce or this oil trough or this oil, whatever you want to call it, chaos? Why would we not participate directly in a speculative manner in these type of accounts, in these type of products for our clients?
Yeah. I think it comes down to slow and steady wins the race. Diversification, owning a broad market, not trying to buy the thing that's hot. right? Dollar cost averaging, making sure that you're adding money on an ongoing basis. So when the market's down, you're buying more, and that works out in the long run. We base our investments on proven academic research that shows the best way to get the highest return for the least amount of risk in your portfolio. And that's what we're going to stick to. I like to be boring. The markets are exciting enough. We have found that sticking to our guns, sticking to our process through thick and thin is what really generates those good long-term returns.
Well, friends, there you have it. We wanted to just do a quick episode on the oil. We're going to continue to follow it. It's kind of intriguing. Chris and I are shaking our heads. If you look at us on video, we both have shaved our heads off because we tired of pulling our hair out at this point. So to a couple of other colleagues in the office, we're like, we're done. We can't even get out to get a haircut. So we're just like, it's gone. It's gone. Look, friends, I realize that this is chaos that we're dealing with. Whenever we go to chaos, oftentimes we react like Chicken Little. Sometimes we do. We run around, the sky is falling. We want to do an action. I love the fact that Warren Buffett, I love many of his quotes. He provides sage wisdom when it comes to investing. And one of his quotes he made years ago was that our investing should be borderline lethargic. Slothfulness is what he actually put in that sentence. It should be borderline lethargic and slothful. My mind goes to a sloth. We should be very boring. We don't have to get into the most up-to-date, the what's hot, what's sexy at the point. Many times that ends up causing us problems. And Chris and I have seen this through my 20 years almost, and Chris's 40 years plus, I think it is, in the marketplace. We've seen where whenever you make hasty decisions out of fear or greed, it does come back to harm. It does often, not all the time, but many times, statistically, many times, it will harm you. So Chris and I want to just reach out to you through the podcast, through the video, and say, look, we get it. We understand. We're hearing it. Stay the course. Stay the course. It's tried and true wins the race. As I said last time on the show, an old ancient African proverb says, go far, go together, go quick, go alone. If you want to reach your goals, you need to have somebody who can help you, hold you accountable. And our team is here. You hear the intellect that Chris has. You know the team and the business side. We have a team here that's ready to help you. If you need help managing money, if you're scared to death, if you try to reach out to your financial advisor and they won't return your call, then reach out to us. You go to financiallysimple.com, work with us. You can call the office. You call the office here at Heritage Investors. You can find us on heritageinvestors.com. And one of my colleagues, Chris, Brandon, one of the other team members here will be more than happy to help you through this particular process. Chris, parting words of wisdom, brother, as it relates to today's topic.
Oh, that's a tough one. I think I'm reminded of the difference between the market and horse race. One of the horses must win. Yes. I hear you, buddy. Well, guys, Chris is going to bring us current events, try on a weekly basis to have him bring something up like this. And so if you have questions, if you say, hey, I'd like to hear Chris's intake on this particular, or input on this particular topic, go to financiallysimple.com/ask Justin. Our team is tracking those. You're welcome to reach out to us through the social media channels. You're welcome to leave us a comment in the blog post or in the podcast below, and our team follows that. And then I'll make sure Chris is prepared. And if you have a question for him, we'll do the research. We'll pull it up. Until next time, look, I realize life is hard. I realize life is frustrating, but life is good. Man, we live in America. The sun rose today and it will rise tomorrow. So life is good. It can be frustrating. To watch oil do what it did, that just is just stupid in my opinion, but it's frustrating. Look, money doesn't have to be frustrating. We're going to continue to make our lives at least financially simple. Until next time, y'all go out and make it a great day. Chris and Justin signing off. Y'all take care.